Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today we have decided to prepare the special report on the Great British Pound and United Kingdom economy because, well, actually it was a long time since we have taken a look at the last time when we prepared the last report, fundamental report on the United Kingdom, and currently it has some special features that brings significant volatility and a lot of background for trading. And in the current circumstances, we can't just ignore this. It's a lot of political events stands around in Great Britain, and situation here is very interesting because if you will just surf around the headlines of the news, you'll see either extremely bearish view or some really bullish view on the market. But where the truth stands? Well, if you read our report, you will be a bit surprised because you'll see how the different views could match in the single scenario that we have prepared. Although I am not really the big fan of different compromises, especially on trading and in the view on the currency moving. So I like to, when we have some clear understanding and direction, and do not want to combine that it might go higher or it could go lower and everything could happen. But overall situation here stands so that we expect wide range as our basic scenario for the Great British Pound. And as the range is really wide, it involves different forecasts of different well-known international banks. So for example, the General Societe Bank suggests that cable should drop to the 127 nearest time. Other analysis, HSBC, as we said previously, suggests that it could drop to the 120 area. Others think that cable could rise higher. And actually, as you will see, all the scenarios raise just one question: in what time frame? And as you will see in our technical analysis and the fundamental view, you could see that all of these targets could be reached if they correctly, properly spread in a time frame. And current situation in the cable is really very tricky. And I was a bit surprised when I saw today and take a look at the fundamental background. And just in 2 words, if you do not want to read the fundamental part, I just in 2 words tell you that the major problem for the economy currently is a combination of the higher debt, not only in the government, but the public debt as well is rising. And the recent collapse on Friday, you could see it's most due to the information that the public debt first has risen to the £2 trillion, so it's really a very significant amount. And second, it's big problems in unemployment. And you can see these 2 factors are mutually combined, so they are not mutually excluded. So higher unemployment lead to the higher debt and more stimulus measures from the Bank of England. If we will keep all ultimate scenarios outside, so for example, I'm not considering currently that Bank of England will fail to stabilization of the situation, Brexit will end with a hard Brexit, and United States will come to recovery way very soon after the elections will happen. All this could push the cable significantly lower to our negative scenario. But if we suggest something moderately positive, that Bank of England will find some sources and ways to stabilize the situation, United Kingdom economy will start to recover better from the virus attack, and that provides us the scenario that I have put in our monthly chart analysis that suggests wide range for a cable fluctuation and lots of different patterns. that could be combined, and all these targets that have specified by the famous analysis could be involved in just one technical picture. So if you're interested with that, you could read and see what we think. Here on the daily chart, we're just trying to understand what could happen in the nearest time within the few weeks and what we could do in the beginning of the next week. So our analysis suggests some pullback up from here where the market stands right now due to the reasons that we already talked about. So you know that market has completed our A, B, C top OP target, so our epic trade of the month, of the weekly huge engulfing pattern is coming to an end with the hitting the OP. Still, our longer-term analysis, monthly and weekly, suggest that this is not the final point of the upward action. The patterns that we have suggest that market could move slightly higher, somewhere to the 136, before the major pullback will happen. Under the major pullback, we suggest drop somewhere to the 120 area. That could happen closer to the end of the year. But first, another upward action could happen. That's why, in the current situation, we think that this pullback could happen, but we treat it as temporal, and that's why we point just near a standing target. As a major target, we suggest retracement to the 2880 as first fib level, potentially 50-50, but it could reach maybe 127 or a confidence area around 2640, 27 here as well. That's, by the way, the view of the Société Générale analysis. He suggests that within the few weeks, market could drop to the 127. It totally corresponds to this perspective, while we also think that retracement could be smaller. But anyway, all this stands in the same scenario. Currently, with the OP, with the confidence on the weekly chart, and the market is hovering around the overbought on the weekly as well, this is good background for a technical pullback. Also, the butterfly suggests, as you know, at least the 30% retracement that also corresponds to 2878. Here you could easily recognize the rising shape of the minor hand shoulders pattern, which has the A, B, C, most probable target at the same area. That's why within a few weeks or maybe 1 week, I don't know how fast it will be, we will focus first on the 128.80 target. That will be our first downside target. On the top, you also could see there's a lot of struggling price around the level. Reversal candle has happened, still valid. On Fridays was drastic action. Well, retracement that we have suggested has started in core, has not been changed, but the way how it starts is a bit different. So if you're taking the short position, that's great. You could just manage your stops and see what will happen next. On the intraday chart, guys, we have some riddle that it's difficult to resolve right now because we have too few inputs. It's clear with the head and shoulders, but the question is whether the market will start to form a right top, whether it will reach the OP and then turn up right from here, so it will be skewed neckline where it stands already. As you can see, if you just drop it by these lows, you could see that probably it already stands in place, right? So it could be in this manner, just reaching the support, starting the upward action, and then maybe downside action. Or as we see that the sell-off is really strong here and here as well, this market will proceed lower to the 127 XOP. I do not take the 1618 XOP because it's too deep. 127 extension better corresponds to the support area. Maybe market will show just minor pullback here and then starts downward action. That's approximately the same. And by this view on the 4-hour time frame chart, we can't answer on this riddle. So it's impossible to tell definitely how it will happen. But one thing that we could tell is that if pullback will happen, it probably will happen somewhere around 3160 area, where the top of the right arm should be formed. So what to do for those who already have the shorts? Well, what to do? First of all, well, you could consider taking the book the profit, or at least the tight stop. Alternatively, you could keep an eye on the hourly chart, because on hourly chart, Friday action forms the great drop. It's forming nice thrusting action, and here you could keep an eye on the possible Judd Napoli patterns. For example, we already have the close above the 3x3, forming on a new top here, because you can see OP has not been quite reached, so market could form the another bottom. Of course, bottom, not the top, of course. 3050. It could hit the OP and then turn up again In this case, you could get the double repo buy. Double repo is a reversal pattern, and if you will see the double repo, it makes sense to close the short because upper direction right to the 3160 could start immediately because this is double repo pattern. It means that high probability the market will not move back to the support and starts upper direction immediately. If instead we will get the bread and butter, for example, 30% pullback here and then downward continuation, well, in this case it could mean some continuation. This scenario, second scenario, will be probable that market could drop first back to the neckline and only after that will start the pullback. So this is not very important. It hasn't changed the overall view on the situation, on the trading, but that could help you where to close position, how to manage your position that you already have. If you're trading on the hourly chart and lower, you of course could keep watching, keep an eye on these possible patterns and trade them separately, because this will be directional patterns. Maybe you could try to use it. So that is what we have currently on the cable. I have talked and explain only the minor part of the all information that we have. And if you're interested, you could read the weekly report as usual. So let's see what will happen. And the next week we continue our journey with the stuff that we have on the cable definitely.